Somebody asked the question about the disparity between the public's perception and expectations of inflation and the experts, right? Because the experts are saying that, oh, it's all transitory, nothing to worry about. But the public, and I'm not just talking about consumers, but businesses are expecting the price increases to continue. After all, why else would Federal Express be raising prices? Why would UPS be raising prices? If they were as confident as the Fed that all this was going to be over in a matter of months, they probably would be sticking it out. They wouldn't be raising prices. The reason they're doing it is because they know they are down in the trenches and they know that what we're seeing is not transitory. This is real, this is permanent, and it's going to get worse. And a lot of other companies who have held the line on price hikes, they're now throwing in the towel on that and they're raising prices because they're convinced that what we are experiencing is not just a transitory bump in the road. This is a whole new path that we're now traveling, and they're trying to prepare for it by raising prices. But consumers also, you look at these consumer expectation numbers, and consumers are expecting much higher rates of inflation, right? And so Powell was asked, what do you do with that? Do you just ignore the consumer, the public, because they don't know what they're doing and just pay attention to the experts? Well, the experts aren't paying attention to prices. The consumers are. I think in this case, the consumers are right to expect higher inflation. They're just wrong in that it's going to be even higher than what they expect. So they're still wrong, but they're not as wrong as the experts because they're going to miss the mark by an even wider range. But Powell basically said that, hey, they're just probably wrong, but he did admit that the Fed is watching these consumer expectation numbers, and if their expectation ever became a big problem, the Fed would react, which of course is another lie because they already are a big problem and the Fed is ignoring it. And in fact, the Fed claimed that the expectations that consumers have are only for slightly above trend. And in fact, earlier, he mentioned again, he said, well, no, in response to a question about higher inflation, he said, well, yes, we're above target, but not by a lot. He said, we're talking 1 or 2/10 above target. And he said, that's such a small number. And he doesn't understand why households would be at all concerned if inflation ended up being 1 or 2/10 higher than their 2% target, which if that were true, then yeah, consumers probably wouldn't really care if we were at 2.1 or 2.2. But the point of the matter is we're not just above target by 1 or 2/10. I mean, you're talking about triple their target rate, if not more. And consumers have a right to be concerned about a big increase in their cost of living. It's the Fed that is derelict in its duties in simply turning a blind eye to all this inflation and acting as if it's nothing. Now, again, why are they doing that? I think the only reason they're doing that is because they know the alternative is a financial crisis or a complete implosion of the economy. And so since they know they can't fight inflation, then they have to pretend that there's no inflation to fight. Otherwise, it's game over. They can't admit that, yes, we have a lot of inflation, but we can't do anything about it. They always have to pretend that if inflation ever became a problem, they would do something about it, even though it's a problem right now. And the fact that they're not doing anything about it, the only way out of that is to pretend that there's no problem. And that's why they're not doing anything about it. Because, of course, if it was a problem, we would do something. But since it's not, we don't have to. But we stand ready. Everybody is over-levered. It's not just corporations, it's households, it's governments, every sector and every government sector, from the federal government on down to the states and the municipalities. The entire country is one gigantic over-leveraged bubble. And the fuel that has inflated it, all that air has come from the Fed. And the Fed continues to blow air into those bubbles by continuing QE, by continuing to hold interest rates at zero, and all they do is pretend that at some point in the future they're going to deflate this bubble without even acknowledging that it's a bubble. But the fact that they haven't taken any actual steps to do that, and the fact that they seemingly contradict themselves and they say things that even superficially are obviously not true. Yet nobody really picks apart the inconsistencies the way I do in their very statements. It is very easy to tell the truth, because if you tell the truth all the time, then it makes sense. But when you're lying, you don't get your lies straight. And sometimes you tell your lie differently. If you're telling the truth, it's never going to change because you're just telling the truth. But when you're lying repeatedly, your lies are going to change. And sometimes your lies are going to contradict your other lies and expose what you're saying. And so that is what the Fed is doing. It's obvious to me. It should be obvious to more people. And the reason that we're still at zero, the reason they only talk about tapering and don't actually do it, and the reason they're reassuring everybody that liftoff isn't going to happen for a long time and we're a long way away from that, is because they know damn well how over-leveraged everybody is, even if they don't accept responsibility, which they should, because they've supplied all the alcohol, and that's why everybody is drunk. But if they just think everybody is drunk and the Fed has no idea where they're getting this alcohol, even though they're getting it from the Fed, but they know how drunk everybody is, then they're not going to take away that alcohol. They're not going to do anything to bring about sobriety. They don't want the economy coming off of this high because they're afraid of what everybody's going to notice when they finally sober up, right? Because all these mistakes and all these malinvestments, you don't actually realize what you've done until you sober up and you're thinking straight. Well, we're still drunk at that party doing a bunch of stupid things. The Fed could see that. It doesn't want it to end, so it has to make up one excuse after another why it's not doing anything. But at some point, the markets are going to tire of this game. They're going to be tired of a boy crying wolf over and over and over again, and a wolf never actually showing up. At some point, the markets are going to figure this out, understand the Fed's predicament, and then it's going to hit the fan. That's when you see the gold market explode. That's when you see the dollar market implode. But you can't wait. As I've said repeatedly on this podcast, you can't wait for that to happen to act. You need to be positioned before everyone wakes up, or not even everyone, just a significant percentage of those who are asleep right now wake up. That's all it takes. Not everybody, just a large enough minority to figure it out, and that's all it's going to take. So before that happens, you load up, you use these selling opportunities, and we had some selling opportunities earlier in the week. We had a big drop on Monday, a lot of these Evergrande concerns over the weekend, weakness in the Asian markets. So we had a big sell-off in the Dow on Monday. Gold stocks still under some pressure. Gold hanging tight. Gold actually up on the week, even though it was down a bit today following the Fed speak. But overall, gold held up. Even if gold stocks went down with the market, gold itself held up. And in fact, I thought it was interesting on Monday when everything was getting killed. I forget where the Dow was on the lows, down maybe 900-ish. It was never down 1,000. But even though the dollar was up against a lot of the currencies, like the Aussie dollar or the Canadian dollar, the dollar was down against the Japanese yen, the dollar was down against the Swiss franc, and the dollar was down against gold, because gold was up about $10 on Monday. And, I heard people, so-called experts, commenting on the fact that the dollar was strong. And they said, you see, this proves that the dollar is still the safe haven, because everybody bought the dollar who was worried about the big sell-off on Monday, except that's not true, because the dollar went down against the Swiss franc and the yen. So doesn't that mean that more people were buying Swiss francs and yen instead of the dollar? And also gold went up against the dollar. So that means people were buying gold and not the dollar. So I think the action in the foreign exchange market and in the gold market doesn't actually prove that the dollar is retaining its safe haven status. It's more evidence that it is losing that status as more people are preferring Japanese yen, Swiss francs, and gold to the dollar. And by the way, all you Bitcoiners, Bitcoin was also way down on Monday. So it didn't go up with the safe havens like the Swiss franc, yen, and gold, it went down with all the risk assets. So it is not a safe haven. It's a risk asset. And if it's a risk asset, what is anybody buying it for? Because they're buying it because it's supposed to be a safe haven. If it's not a safe haven, if it's a risk asset, it doesn't have any place in your portfolio, because if you want a risk asset, there are a lot of other risk assets that you can buy that I think have a lot more realistic upside to them with less downside.